Our European Central Bank wants 2% inflation in the euro area. We started 2022 with 5% inflation, had 8% in summer and more than 10% inflation last month. Oopsie daisy. All while interest rates are still near zero. Double oops. If our money loses basically 10% in value right now, is it a good idea to invest in real estate then? Can you hedge against inflation by buying properties? That's what we'll answer in this GermanReal.Estate blog. To answer that question, there is one thing we need to understand. Inflation is like fighting windmills. There's absolutely nothing you can do against inflation itself. Inflation is gonna happen or not, without you or me having a significant influence on that. The only thing we can do is to protect our hard-earned money by investing it in real assets. Equities like stocks or ETFs, cryptocurrencies, commodities like gold or silver, or real estate. All of those real assets work the same way, except real estate that works differently. And that's what makes real estate such a good hedge against inflation. Here's how. With any regular investment other than real estate, you are usually starting from zero, and with every time you invest more, you are saving up. Let's say you invest 100 euros a month to keep things easy. After 1 year, you have 1,200 euros in your account. Fees and taxes and everything ignored for now. Hopefully you invest with a nice return, so you get this exponential growth. Compounding interest in case you want to impress your friends with cool financial vocabulary. Nothing wrong with saving up like this. I do that with some of my personal money as well. But we need to understand that if our goal is to save upwards, inflation fights against us because it is bringing the value of our money down. Let's say you're making a 4% rate of return when saving up. Congrats that you're making your money work for you instead of the other way around. But when inflation is at 4% at the same time, you are not getting any richer because your investments are getting devalued as fast as you make them grow. All you do is fighting windmills and you're basically left with no return. Actually, it's worse because your 4% return is taxed with at least 25% capital gains tax every time you make a profit. So you're making maximum a 3% net growth while your money loses 4% in value. Which means you're realistically losing 1% of your money while you're actually thinking that you're getting 4% richer. That's not good, is it? And your 4% rate of return comes with an investment risk while inflation is a guaranteed loss. So, what do we do here? Well, how about fighting inflation, which you're not gonna win anyway? How about we make inflation our friend and work in the same direction?
But Axel, how do I do that?
Here's how. Instead of starting to save at zero with your own money, why don't we take a loan from a bank and buy a property with it? When doing this, we don't start at zero, we start at whatever the property value is, 100k, 200k, doesn't matter, same logic. And that changes everything, ladies and gentlemen. First of all, we don't need to save up gradually anymore because we have a lot of money from day one already. And second of all, since we're not saving up anymore, we are saving down by paying the mortgage back over time. When saving up, inflation works against you. When saving down, inflation works with you because inflation decreases the value of your mortgage. Of course, the nominal euro value will stay the same over time, but the more we fast forward in time, the more you will pay the bank with money that has lost monetary value. With 10% inflation, your bank loan is 10% cheaper than it was last year. And it's not just that you make a profit because your mortgage loses monetary value, you also have a property that most likely gains value. If you bought a good property in a good location, of course. With a savings plan that starts at zero, you're not getting a lot with a 4% rate of return in the first year. When you have a 100,000 euro property that makes a 4% rate of return in the first year, you're making 4,000 euros in profit. And you're not even taxed on that profit if you wait to sell the property for at least 10 years. That is the tax-free speculation period here in Germany. So if you want to profit from high inflationary times like these, you can do it. Just remember to invest in real assets rather than having cash, because money can be printed by central banks and loses monetary value because of that. And get into debt. Good debt, that is. Like a mortgage for a rental property. Don't get into bad consumer debt and spend money on stupid that you don't need anyway. And just this easy, you are winning while everyone else is hating on inflation. Now, I realize that it's not so easy to go out and buy a property just like this. That's why we created real estate security tokens to make your life as easy as possible. Just hop on our website GermanReal.Estate and see what properties you can invest in right now.